Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday. It took me a minute there, June 24th. Mike Boutros on the horn with you this morning. Great to be here. Eman, Kay, Pete, Ted, everyone in the room. It's been quite an interesting week. So we got the rally in the dollar, which was great last week. We've been seeing that slowly erode lower, but we are looking for that dollar strength to persist. So the focus right now is on possible support for the dollar pullback. So on the menu, we'll hit DXY, Euro, Sterling, Gold, crude. Looks like it's failing near the highs here. Kiwi, dollar, CAD, dollar, yen. We'll also hit Aussie dollar, SPX levels, and we'll take a look at Bitcoin on this rally, whether this thing is done or not. Eman, on time today, says good morning to you. And everyone in the room. Let's jump right in. So the only event risk we got today was the BOE. We just got the release of durable goods orders in the US, 2.3 versus a 2.8 clip. GDP for the first quarter final read coming in right in line with expectations at 6.4%. So shouldn't see too much play there, but let's jump right in. Here's what the DXY looked like as we entered the week, right? This was on the 21st. Came into the open of the week right at slope resistance. Before we even start that, here's what the weekly chart looked like, and here's what it looks like now. Okay, the big area of resistance has still continued to hold. That's 92.28 into 92.60. The 2018 objective yearly open, the 618 of this year's range. You also have the 100-day moving average. I'm sorry, excuse me, this is the 52-week moving average right there as well. So you got that rejection, right? A little bit of a pullback. How deep does this pullback get? That's what we've been trying to assess since the start of the week. The daily chart had us in this really neat ascending pitchfork formation. Key support is still going to be at that 38.2, 91.30. We haven't made it there yet, but that's where the median line is. That's where the 38.2 of the near-term advance is, and that's sort of what we want to see hold support. Again, this is what it looked like on the intraday chart. Here's what it looks like now. So the weekly, excuse me, the daily, obviously pulled right off that slope, didn't quite make it into that resistance range. Here's the pullback. Key support, near-term bullish inval. I'm looking for a low possibly ahead of this region for another drive into that 92.46, 92.60 region. That's still critical. It also ends up being, on the weekly chart, we talked about this being the 2018 open and the 786. On the daily chart, it's also a basic 236 of the entire decline from last year's high, 92.46 right there. So we identified the key resistance level, want to see a hold above 91.30. What are we doing? Here's the intraday chart. Okay. Same formation, looks pretty clean. This formation right here, guys, by the way, is just matched up using this original slope to find the gradient. And here we are with resistance, buckle back below the 75% parallel. I want to see a low ahead of this if possible today. Obviously, this is your breakout zone. Anything northbound of 92.60, you're looking for 93. You're looking for 93.40. Big zone. That's a November high day close. Was also the highs that we registered back here in March. So the regions are clean. We're just getting some failure in momentum here, right? Just flatlining. Again, tomorrow you do get some event risk with core PCE. That's the Fed's preferred inflationary gauge. It's expected to come in at 3.4%, right? Versus at 3.1, which is what we got last month. So with all the talk about inflation, all this focus on the inflationary targeting, I am expecting that possibly to offer some volatility as we head towards the latter part of the week. But for the dollar, see if we can't get maybe another strike lower, but ultimately looking for that possible swing low into the median line if we are going to hold on this initial advance. Any questions on DXY? The big player for this is definitely going to be tomorrow, that PCE number everyone's been talking about all week. All right, so that's DXY, number one. Number two, Euro. Here's what it looked like last night. We were coming off of slope support, just like DXY was coming off of slope resistance right into the open of the week. Mirror inflection. Here's Euro right off slope support. identified this possible bear flag formation yesterday. We're kind of meandering out of it, so we're not getting the effective break that I wanted to see. But I'm still looking at that region. So here's what it looks like now. Kind of meandered a little bit out of it. Not going to necessarily call that a break per se. Still looking for possible exhaustion off one of these 2 points. Okay. Ultimately, if we break back below the weekly open, objectively that would be, excuse me, a bearish break. But I still want to be mindful of 1824. Take you back to the daily chart. 1835 ends up being the swing low that you made for the March opening range low. The 786, which is on this chart, is just below at 1824. So we're really, again, at a longer term uptrend support here in the euro. Here's the daily chart with that formation we've been following since last year. Resistance, resistance to the upper parallel right into the open of the year. This is the first check of uptrend support since May of last year. So not surprised, right, to get a little bit of a bounce here. Shouldn't be that big of a deal. Looking for possible resistance again into 120. Ideally into this region. Remember, this is a break of the month, the opening range, right? So we're looking for a late month low. We're in the 24th of the month, so we don't want to get too aggressive on that bearish call as we close the month out, but certainly on the back of a bounce off of downtrend support, we're looking for a rebound off of downtrend resistance. So maybe a little bit higher. I know Jamie's got a call at 1950 for the entry against that high. I want to try to see if it doesn't. The way I want to play this is into the US Open. If this failure happens, maybe it happens right into that, maybe it gets through, that's your next level. Ultimately, the name of the game is looking for a topside spike, looking for a topside exhaustion to fade. Now, this is the 4-hour chart. Again, let me just zoom this into the 2-hour chart, give you a little bit picture of the momentum barrier here. Starting to really struggle right around that 60 level. That's a good thing. Again, looking for topside exhaustion. Euro, need to break below 119.18 to really get this thing going. No major euro data into the close of the week. We're pretty much done on the data front. So really look for US dollar price action to drive. And again, exhaustion is the name of the game. You're going to see a theme that's going to be recurring throughout the webinar in all of these setups, guys. The dollar took a breath, ripped last week, broke a lot of levels, broke a lot of opening ranges. Now it's just taking a little bit of a breather. We want to look to reset that dollar strength, hopefully, in the days ahead. Any questions on euro? Number 2. All right, so one of the better plays that actually manifested pretty decent this week was sterling. And I gave you guys an update on this as well. Nice area. I was really hoping to see a pullback here, and we are getting an initial play to the downside. So the area is defined by 20, it's basically the 140 handle, let's call it, into 140.11. 140.11 actually ended up being 2 equal legs off the low. Didn't quite get there, but you can see we probed right into that region. Again, this is just some former pivots, really, really nice levels along 140, 100% extension, so 2 equal legs off the low. And you saw the rejection that we got there. Now, all things held constant, today is a pretty big reversal day. I would have loved for this to be an outside reversal candle, kind of like what we got up here, but it wasn't quite as effective. So the question is, I need a break below 38.67 to mark resumption. It's the 618 of the weekly range. That'll take us back for another test of key support down at 37.92. I'm very mindful of sterling because this, let me just say this, if we still do have a little bit more of a dollar exhaustive trade, if this spikes through, we still could get a 40.70 tap before we turn. And if you look at the daily chart, that converges basically like next week right into the highs. So I'm really looking for this inflection to follow through. If you're in this trade, you know, as we open up the US trade session, if we get into 38.67, I'm going to put stops at break even. Might peel a little off here, but you know, I really need to see an assertive move below that 38.67 to think this is going to be a longer term trade. So nice reaction, nice rejection. Initial pump looks good. Let's see if we can get some push as we get into the US Open. Just a quick reminder, sterling on the weekly chart, we came off of phenomenal resistance. We talked about this for months. That's 42, 36 into 43. We've tagged that. It's the opening range highs for the year. It's the range highs for the year. Here we are just above multi-month uptrend support. So again, on account of the sterling, really need to break below this region here to really mark the validation. This is just a basic trend line off the lows. So clear levels, we just need that pump in momentum. If this turn is legit, again, want to see that drive through 38.67 on the downside. BOE interest rate decision was earlier today. Didn't see much commentary worth of note. It's probably what got you the little downside rejection there, but rates are unchanged as expected, 0.1%. I'll let the funny guys dig through the commentary on that one. All right, so that's British pound. Next up, juicy trade everyone's been looking at but hasn't done much yet. It is gold. We are just sitting at support, critical support for gold, and we've been there for a while. Here's what gold looks like first on the weekly charts. Has been clear as day. Major reversal. We talked about 1920, 1909 for a while. That turned materially broke last week with the plummet dropping, closing just below the 618 retracement. And as I always tell you, this is where the slope really can be your savior, right? Because you got to close below the 618. Typically that's bearish, but slope support is slope support. So we just dipped right into it, a little bit of a rebound. The shallowness of the rebound certainly tells something and gives you a note on the momentum thrust. So I'm not expecting much upside here, but certainly if we do break below this, key support still 1690, 1682. It's exactly where we bottomed out back in March. This is big support. This is big support. So you want to curb your appetite on the downside for now. Okay, if we do break, it's probably going to be another run. But certainly we're at a pivot level right here. If you take it back to the daily charts, gold looks like this. Same slope, a little bit more clarity. So just on the daily, on the weekly, all I had was that 618 to keep this chart clean. But if you dig down into the metrics, guys, on the daily chart, there's a whole lot there. Again, the 618 of near-term rally right there. The 618 extension, I know it's a little bit harder to see right here off the, it's this thing in blue, off the high, low, high for the start of the year. That's the 618 extension. It's also the 50% retracement of the 2020 rally. Former highs from May, former lows from November, opening range low for February. Break was instant support into the close of April, was the May opening range low, and now it's the June low. Everything is lined up in this little region between 1764 and 1769. That's what needs to close on a close. I mean, that's what needs to break, excuse me, on a close basis to validate the next move lower, 1730, 1682 on the downside if we do get it. But this is huge. This is huge for gold. Uptrend support on the weekly, uptrend support on the daily. Here's what the intraday looks like. So even within the confines of the near-term decline that we've been tracking, okay, here's our last gold update last night. We noted that the weekly opening range is set right above support. These are textbook plays, guys. Here's your weekly open. So the weekly open is in that range between 1764 and 1769. The weekly opening range low is in that range. You've got a well-defined range. 2012 high, 1795, that's near-term resistance. Bearish invalidation at 1820. So if we make it through that, we'll be right on the resumptive path for gold. All things held constant, though, we are still in a near-term downtrend. So even if this thing does break the weekly opening range and rallies into 1820, you're not out of the woods yet. You're not out of the woods yet. So to put things, again, bottom line, I love to say the bottom line. You see that, I put that on those reports on Daily FX all the time. We are at uptrend support, but near term, we're still within the confines of the decline. Okay? Broader uptrend support, still in this near-term formation. So the play here we'll want to focus on, I think you might, honestly, I don't even think you'll get anything necessarily on this until we get into tomorrow, but the PCE inflation report, that personal consumption expenditure, is likely to be a player here in gold tomorrow, okay? If the dollar takes another drop on that, if we take a deeper dive on the dollar correction, I'm expecting that this thing will probably pop near 1820. If the dollar holds this and this low is pretty clean and you know, and we start to, maybe we don't make the dip or we fail ahead of the median line on the resumptive path, that's where the gold drop down becomes more of a risk. And a break below 1764 on a closed basis, again, would be terminal for near term. It'd be a lot sharper decline towards 1730 and 1707. Key range in gold, well defined. Look for the break of that weekly opening range. Number 4. Okay. Let's keep the commodity block in focus. We also gave an update this week on crude prices, and certainly crude prices are something that's going to be very, or has been in a lot of focus these days after this rip higher. So the major focus that we were running into, or that we were talking about since the start of the week, is this resistance range. I'll start this on the weekly chart because it really starts with this zone that we're in right now. Here's what the weekly chart looks like for oil. The big resistance zone that we've been talking about, the 2012 low, or the 2011 low, excuse me, and the 2012 low. That zone, once broken in 2014, was a drop off. That zone caught the highs in 2018. That zone is being tested right now. Okay, now aside from that lateral level, which has obviously seen main inflection, right, major inflection in price, you're also at uptrend support. Here's a modified pitchfork off the low from November of last year and the low of April of this year. Median line break, 75% parallel resistance. Again, a topside break from here, you still have to contend with 77.37. It's still a big level. It's 2 equal legs off the low from last year. But this is the first sort of region you want to start to ease up a little bit. You know what? We could probably even drop that reversal day close there. So just for clarity's sake, right? That's your big zone of resistance. You're looking at 74.94 into 74.26. Also note that this is the 5th consecutive daily rally, and that's not actually so. It's not actually so rare. We've seen multiple stints of this was a 7-day rally, a 6-day rally, a 5-day rally, a 7-day rally. You know what I mean? We've seen crude go through these stints of, you know, multiple days of ascents, but you notice that on most of them, this is another one that wasn't, you got a little bit of a kickback. You got a little bit of a pullback, if it were, a relief pullback. So if anything, I'm really curbing my appetite for the long side. I do think crude is still in a really strong uptrend. I do want to buy it on a larger pullback, but from where we're positioned now, you're already flirting with major weekly resistance. So I'd ease up that upside bias just a bit, temper those expectations. And here's what it looks like on the daily chart. It's already starting to play out. So you can see the perfect tag we got yesterday. Okay, here's what it looked like in last night's update. The perfect tag we got into that resistance zone, 74.26, 74.94. Again, failure. Near-term support's going to be at 70.95, basically just around 71. Now, this is the 618 of the entire decline from the high that we made in 2011, right? But it's been a decent pivot in price, and it converges on the median line today. So watch for support there. If we break a daily close below this, it would suggest a larger pullback in crude. What else suggests that? Well, if we take a look at the objective momentum indicator, you can see strong divergence with price action making a higher high and the oscillator making a lower high. Both of the reference points above 70. These tend to be weak signals, not the strongest, but it is an indication of possible waning momentum. Again, threatening the immediate upside bias for crude. Here's what it looks like on the intraday. And here's what it looked like yesterday. Okay, so I showed you the 4-hour on this yesterday, so I'll just, for consistency purposes, let's just keep it on a 240 minute. And you can see, again, Made it back below 2018 high. There's the buckle. Look for that trend line support. That's really the major level you need to break below. This is also the objective weekly open. So if we get through this, if we get through the median line, that's the corrective stance in my opinion. 67.94, key support still at 67.56. I actually would be looking for possible exhaustion down here if we do break near the 68 handle, 67.90. But that's all on account of, you know, buckling back below the median line. So we'll see if crude has a little bit of pullback. Again, still constructive broader on the trade. I do think we see 77.36 at some point. It's just at this initial test of this resistance zone, you might get a bigger pullback here. So temper expectations for the immediate long side on crude. Questions on crude? All right, that is number 5. Okay, Kiwi. What are we doing with Kiwi? Where's the Kiwi going? Well, here's what it looked like on our last update. And here's what it looks like now. So I'll remind you again, Kiwi finally broke that little, well, I shouldn't say little, that big range that we were in, 160 pips some odd range for a couple of weeks on the weekly charts. When that broke, really gave us the downside bias, but we haven't really cleared the yearly opening range lows yet. Okay, so here's your yearly open, set a high, set a low in the first quarter, you test that high, it holds. Here's a test of support, and it's a big bounce. Now again, you have the 52-week moving average, basic slope support. This is a 3-point touch, so that's a confirmed support line. And then you have the highs from both December of 2018 and 2019 highs. This year's opening range lows, this is key support, 69.40 into 69.69. Weekly chart, right from 1,000 feet up. Now we do need to alter and fix that 618. That's null and void now. We've already broken that low. So I'm still going to look for resistance heading into 71. Nice pivot in price. And the immediate focus is on this range right here in Kiwi. Here's what it looks like on the daily chart. So I'm not sure what happened to my slope here. Okay, so let's add that back on real quick. But here's the daily chart. First level of interest of the decline off the highs that we made just in May of last year gave us this zone right here. 2018 gives you open, gives you 70.94. The 38.2 gives you 7.73. We're looking for resistance right here. Okay, all things held common, levels unchanged. It's been a really nice rebound, like I said, off big support. That was actually the 1618 extension of decline as well. So we noted this risk earlier in the week that we could see a larger rebound here. We're looking for possible exhaustion right there, right there. Questions on Kiwi? Here's what it looks like on the intraday chart. This was back on the 22nd. Here's what it looks like now. Okay, looking for reaction here today. Key support unchanged, downside break. You're looking for 68 rather, basically 67.98. Pretty clean. If you initially took the Kiwi long, I see that. If you initially took the Kiwi long, yeah, I would be doing something at 70, 73 into 70.94. Personally, again, my humble opinion, I'd be shaving off most of that position. If you want to leave a little on just in case you get the topside breach, but at least break even, if not better, on the stop, maybe just below the Asian low would be a way if you want to just leave a little on there. But I'm looking for an inflection off this zone. I am looking for inflection off this zone. That is New Zealand dollar, number 6. All right, you guys are a bit quiet today. Everyone all right? It's one of those weeks where it's just been a slow grinder trade in one direction, but the direction has been against the broader dollar break, broader dollar rally that we started to see last week. So we're looking for that, you know, to fizzle out heading into this week. Next up is dollar CAD, another one that played out really well. Here's what dollar CAD looked like earlier in the week. We started the week just like Euro, just like DXY, started the week right at resistance, okay? March low day close was 124.84. You had the upper parallel for the ascending formation we've been traveling in, failing there. Here's the downside break, and we were checking the median line yesterday, and that was kind of the focus for was dollar CAD go, excuse me, going to break lower or not. We did break lower, hit into the 75%, 25% parallel, and we're right back at resistance. Key support still 120, 190, 122. Again, another trade. It's the same setup, guys. Momentum starting at flat line there near 40, looking for an exhaustive low. If that was it, a break back above the median line is what marks resumption. Okay. If we drive lower, that's kind of your last ditch effort for finding some support here in dollar CAD. I don't, again, just my humble opinion, not a trade recommendation. I don't personally think we get down there, but I am looking for a little bit more evidence, okay, of an exhaustive trade on the downside here for dollar CAD. Largely speaking, again, the daily chart, you can see the magnitude of the drop that we saw was pretty big. It wasn't an outside day reversal. I was watching this closely, but it was a reversal candle. So as long as we hold this formation, it's pretty good. This was huge here. This was the low day close from back in March, but it's also basic slope resistance dating back to the highs we made in late March of last year. 1 touch, 2 touch, 3 touch. So yeah, maybe a little kickback. If we're still heading higher, we're looking for support ahead of 129. Excuse me, 121. Questions? All right. Quick dollar CAD update today. Pretty steady decline within the uptrend, off uptrend resistance, looking for exhaustion, ahead of uptrend support. The abomination, who has been involved with this one? So this thing just rips, reverses, rips, reverses. Classic dollar yen price action here has been probably ripping up retail traders. I haven't gotten involved with this at all. Just a disclaimer, the levels are actually pretty good, I want to say, but there's just been no consistency. So you head into resistance, you pull back. The pullback gets much deeper than you expected. Then you break resistance again, you get the pullback. So if you've been trying to trade this as a trend sort of swing trade, excuse me, you've probably been getting stopped out every time it pulls back and then it rips higher again. This is the classic dollar yen. That's what has earned this trade the name the abomination. So here's what it looks like on the weekly chart. I don't want to mess with this thing. The weekly chart still looks ridiculously clean. Interestingly enough, look at that slope, still resistance. Last March on the rally failed at the 75% parallel. Here's the median line again. The high day close for the year. We pushed through it. We haven't closed above it yet. So we'll see what happens today. The big resistance level, as we've been talking about, it was actually the thing that we were focused on when we broke back here, is still 1116 to 11, basically 112. 1198 is the 618. So that's the weekly chart, right? If this is going to hold and we still have a further advance, you want support ahead of 109.68 now. Oh, you want to see support ahead of this region now. Okay, so that's dollar yen from 1,000 feet up. Here's the daily chart. I don't like the momentum really struggling here. So that's a third divergent point, right? Don't take my word for it. Here it is. Higher high in price, higher high in price. No new highs confirmed in the oscillator. That's divergence. Unfortunately, like I always tell you guys, this has nothing to do with the time value of the signal. It is telling you that the topside momentum is waning, but it's not an indication of when we should try to fade the trade. So I'll leave it at that. I'm really dollar yen for me is just not on the menu. I've just been looking at this advance, and ever since this move, okay, early in the week, when we dropped into this and we failed right ahead of that move, we broke through the weekly open. I was looking higher, but that's what I was looking for, resistance. If that break is real, we shouldn't be getting this pullback. So I'm starting to lose confidence into this slope right here. I don't want to get too aggressive on this. I'd still say constructive above the weekly open, okay? But top side levels 1120, 1160, and this is the big zone of resistance. So some levels to keep in mind for dollar yen. Here's what it looks like on the 120 minute, right? It's been a steady march higher, but this looks a little toppy here. I don't like to see that. If we're really breaking slope resistance, I want to see this accelerate. This has me a bit concerned. Go neutral here on dollar yen. If not near term, get a pullback towards the weekly open. So we'll see what the Yenski has to do here. Again, ideal scenario, we get a little bit of a pullback, 1140, 1130, and then you see a resumptive move from there, but not much conviction. This one will be on the menu tomorrow. Okay, the inflation data from the US typically very sensitive, dollar yen is, to that kind of data. So we'll be watching this one tomorrow for clarity. Okay, that's dollar yen, number 8. Number 9, here's Aussie. Aussie dollar has been finally a little bit of a clean move here. Same trade setup we've been talking about across the board, guys, with the dollar opening up at resistance and pulling back a bit. Here's what Aussie looks like first on the weekly charts. We finally broke yearly open resistance at 77.01. That was huge, okay? Last week we dropped, we turned right ahead of the 52-week moving average, right ahead of downslope support, right ahead of the major first lateral level of support at 73.85 into 74.17. So it's the same exact trade. We broke, looking for failure either at the median line near 77.30s, max 77. This is bearish invalidation. Key support. One thing I wanted to note on this week's close will be important for me on the Aussie dollar. Why? Objectively, last week's close validated a break of the yearly opening range. So if that break is legit, we should be looking for a late year low, basically a third quarter, fourth quarter low. Okay, so if we close the week back above 75.63, that would almost nullify the break of the yearly opening range. Not something that's going to be beneficial for us to maintain a conviction bear bias. So I do want to see how Aussie dollar closes the week. All things held constant, looking for resistance ahead of the median line. Like I said, bearish invalidation at 77. Key support 74, essentially. Let's call it 73.85. Here's what Aussie looks like now. Here's our last update on Aussie. So here's dollar yen, no change to those levels. And here is our update last on Aussie dollar. So early in the week, we were coming right off support. Okay, here's what the here's what the weekly chart looked like. Again, we just saw that. Here's the daily. There's that 618 parallel. Same 618 that caught the resistance is the inflection catching support. 75.63. Again, that's the yearly opening range low that we triggered in February. Here's the median line, just higher. We're just shy of it, right? 76. Looking for a possible exhaustion there. I mean, I feel like it just might be too clean of a trade. In fact, if you bring in the 38.2, it's a little bit higher. Didn't converge on anything, so I didn't want to just leave it on there for no reason, but you get the picture, right? You get the picture. If this break of the objective monthly opening range is legit, we should see failure ahead of 76.40. Downside targets unchanged. You're looking at 74.55, 74.15, and then the key zone of support is right here, 73.40. Excuse me, 73.78 and 74. This is just a little pivot in price. I wouldn't even stress that 73.40 level. So let's do this. That's your key support. And here's what it looks like on the near-term charts. Get the 240 on this one just to zoom out a little bit. Clean moves, clean moves. Look for an inflection here. If this does break, Bearish invalidation is all the way up to 77.13, but there's 77. Ideal scenario, we do some sort of spike, failed break here, pull back below 75.63, puts you right back on course. Questions on Aussie? Okay, so SPX has been, well, what should we say? It's been kind of tricky here. So I was watching this rally. Here's the near-term setup that I've been showing you guys. So the last update on SPX looks something like this. And we identified that at that 41.45 level last week. Really strong rebound, took us right back above this zone, this breakout here, okay? We were looking for resistance at the upper parallel as we opened the week. Here's what happened, okay? It ran into the upper parallel and then did this yesterday. I didn't know what the hell to make of that. All I do know is that we are now just testing the objective record high. 42.67 is where we maxed out last week. Does this formation hold any merit? At this point, it caught the low, really break of the median line was the onset, but at this point, I'm gonna go ahead and drop that. Discount this as a near-term false break. We're still looking right back at the same level. So you need, again, a close below 42.19 to get this thing going. You can drop this 41.90 region. And on the upside, if it breaches, guys, next level up is 4,300 on SPX. Here's what it looks like on the daily chart. So what we did on Friday was a huge reversal candle, right? Massive. We've been talking about SPX has really nice tendencies to follow through on outside day reversals. Outside day reversal, here's another one, here's another one. We got that a couple weeks ago, but then we reversed it even bigger again, right, to the way up. So the outside day reversal we made there kind of nullified the break below the high day close, below that 38.2, and here we are again probing new highs. 4,300 is the next level up if this breaks. A break below 42.19, in my humble opinion, would put us back on the risk of correction. So man, this thing is sitting at the record high. You got major inflation data tomorrow on tap. Keep some powder dry on this one. Any questions on SPX? Last but not least on my list is Bitcoin. I've been watching this one for a while. It's been freakishly clean by standards of Bitcoin and what everyone's been talking about, but the warnings that we've been sending out since the start of the week have continued to hold. So these major levels of support have all been tagged. There was 3 of them. The low day close for the year, the 1618 extension off the high, measured move, and the objective yearly open. Not Mike Boutros' opinion, not James's opinion, Jamie's opinion, fact, right there. We've been driving into these 3 levels, guys, on the entire decline since last month. Every bounce has seen a pretty stern rally. Here's the last bounce. If we still head lower, or if we're still heading lower, the big resistance zone is 36.47, okay, into the objective monthly open, and that's like 37.33. So yeah, could the rebound get a little bit of a more of a bounce? Sure, okay, but it's still not out of the woods until we clear the monthly open. Here's what it looks like on the intraday chart. And again, here was our last update on Bitcoin. Can't remember if I gave you guys an update on Bitcoin here. His last update was on the 15th, yeah. So that was still when we were in the uptrend. So here's the focus. Even this is like, what, 2 weeks old now. It's on the 15th. We were talking about this key resistance zone as this thing was rebounding off 2011. That's this. We failed right there as we suspected. Pulled back, broke that support, drove down into the 1618, even into the yearly open, and rebounded. So here we are, 10 days later, another bounce off of key support, looking for failure ahead of 36,474, 37,279, looking for resistance in here if this is heading lower. One thing I just wanted to note, as I was looking at this earlier today, I don't know if this is going to be considered a corrective bounce, but if it does, the 100 would a lot of spike into 3870, 38,700. So I don't want to get too rigid with trying necessarily to fade this because it's been quite a decline and there's definitely some bottom fishers. Hell, I'm a bottom fisher. If we get into 2716, 2770 zone for possible entries on a longer term sort of basing move here in Bitcoin, but we don't have the conviction yet that's going to be a concerted low. That would require a break above 3727. Questions on Bitcoin. It's going to be interesting to see how this reacts tomorrow, okay? If the inflationary concern starts to gather pace, you're still, in my humble opinion, you're still going to see those outflows, right, into possibly gold, which is why we're trying to assess whether gold's got that last low or whether we're going to actually start ripping higher again. And with all the negative data and all the negative stuff that's been just generally speaking coming out about Bitcoin, I think there's going to be a little bit more of a washout play here. So keep your eye on those levels. A break below 27,000, by the way, 27,169 would be like really serious. If that were to happen, you'd likely see a much more substantiated this kind of drop again in Bitcoin. So big levels, big levels. I'm certain there's some fishers down here looking to gain some positioning here. All right, well, 15 minutes early. That's what all I got on my menu. If you guys have any other questions or trade setups you want to review, feel free to throw them on the message board. If not, again, stay nimble into that PCE reading. I do have a lot of high hopes that we'll finally get some gyrations, finally get some volatility on some of these setups that we've been crossing as we get into that inflation data. A look real quick at what yields have been doing. Here's the 10-year yield. Everyone's been talking about this, and I don't see this formation on anyone's charts, guys. It's insane. It's been holding like clockwork. This is the basic high-low high, okay? Resistance, support, resistance, support. Even on the downside break, we didn't close outside of that formation. Look at that. Look at that. You can't make this stuff up. So for yields, for everyone who's talking about, well, there's a low in yields because of that reversal candle, that may be the case, but I don't buy that unless we buckle back above 152, specifically the monthly open 158. All things held constant. In fact, we just came off of downtrend resistance, rebounded off of downtrend support. Here is downtrend resistance again. It's the 618 of that near-term decline. Oh, I'm sorry, it's the 618 extension of that decline. It's the former swing lows from April. And it's the median line of the current operative pitchfork formation. In case that wasn't enough, you also got the 100-day moving average in there. So for Bitcoin, it's the battle lines are drawn. 141 is support, 152 is resistance. Look for a breakout of that exact zone to give us the next major move, both in sentiment, as it were, and also in yields. All right, thanks for the clean setups. Have a great weekend, says Jay. Hey, same to you, Eman, Kay, Pete, Jay, Ted. It's always great to see you guys in the room. Have a great weekend. Good luck trading tomorrow, that PCE number. I don't know why. I just got a sense that we're going to see some volatility because the more you see the financial publications litter this literature on inflation is transitory and whether or not it's transitory, does the Fed see it or not? Is it just the reopening trade? All of these arguments culminate into a snapshot of what the inflation picture looks like, and we'll get that tomorrow with core PCE. All right, have a great day, guys. Have a great week. I'll see you again on Monday for the free session, and back on SB here. I think we're going to be back to the regular schedule, but I have to look, and I will keep you updated on the SB homepage with the webinar calendar. Have a great weekend, guys. Cheers.